Welcome back. You're still tuned into Halftime Report on CNBC TV18. Well, let's talk about some stocks now. Symphony is the stock on our radar. In quarter three, the company reported weak set of numbers. The stock has slipped more than 27% in last 1 year. But with summers getting closer, let's understand what the demand is looking like, the outlook on the export market, and also what's happening in the domestic markets. We have Nrupesh Shah, the MD Corporate Affairs at Symphony, joining us now to take some questions. Mr. Shah, good afternoon. Thank you so much for joining us. I wanted to understand that just ahead of summers, what is the B2C demand looking like? Because we did have extended winters this time, which is not something that happens often. So what are the trends looking like right now?
So far in southern India and some parts of the eastern India, starting February, there has been decent timely summer, and that is reflected in the offtake by the trade as well as at this point of time, whatever it should be translated into consumer demand, especially in these two parts, it is decent. Normally in western, central and northern India, it starts from third week, fourth week of March, and in northern India in some parts later on in April.
So what kind of growth do you expect in summer 2024, and as a result of which FY25?
So as per our IR policy, we are not giving any forecast or guidance, but as it stands currently, and even as per the IMD's projection, as well as considering the trade sentiments, we are reasonably hopeful to do decently well. And that's what reflected so far, even in the current quarter.
Okay, all right. So decent growth is what you're expecting. Mr. Shah, can you give us some more details with respect to inventory levels ahead of a possible increase in demand in summer? You said in some parts it'll be higher in April, the others it'll start from third and fourth week of March itself. What kind of inventory levels are you sitting at, and the dealer levels as well?
As far as we are concerned, at our level, inventory is lower than what it was last year at this point of time. As far as trade channel is concerned, it is in line with what it is expected to be before peak summer.
Right. If you could tell us a little about demand sentiment when it comes to prices as well. Have you been considering taking price hikes, or you want to hold prices steady ahead of the festive season? And if you were to take price hikes, would that impact demand?
As far as prices are concerned, by and large, in the beginning of the business year, that is normally during July and August, we decide. And then after, unless there are compelling reasons, we try to maintain the stability. So the point is, until January, normally there is a discount which is being offered. Starting February, there is no discount which is being offered. And hence, starting February right up to June, it is at a full price without any discount. But there is no question of further price hike at this point of time. However, companies' realization on fresh orders post 1st February is always higher.
Okay, and it is also the peak period, right? So there is higher demand for your products, so any discount here would not help. But Mr. Shah, give us a sense of how raw material prices are right now, because you spoke about realizations generally are high after February, but quarter three was also better in terms of margins because of lower input costs. Is that a phenomenon that has continued?
You are right. So as you would have seen in first three quarters, we have increased our gross profit margin percentage, and it seems trajectory will continue.
Okay, so will you be able to continue with the current state of margins, or will there be an improvement? Considering that there will be no price cuts also, the discounts won't be available from February. Will it show in your EBITDA margins then? Will quarter four be better than quarter three?
You are right. So gross profit margin percentage should logically see some more further improvement in both the quarters, current quarter as well as next quarter. However, when it comes to the EBITDA, finally, apart from GP margin, it's also the function of the top line as well as function of other overheads.
So I'm just trying to figure those other overheads, and you would obviously want to spend a little more on advertising, etc. as well. you have an internal roadmap of margins, EBITDA margins going towards 25%. When do you get there by, and what would it take for you to get there?
So first and foremost, we have launched, and Symphony is always a thought leader, product leader, and keep on launching innovative, path-breaking models, and that's how we command the market leadership. And irrespective of number of players in organized market, we continue maintaining 50% market share. So first and foremost, that thought leadership. Secondly, substantially increase in our economies of scale in terms of the top line by variety of the formats, variety of the products, and thirdly, somewhat rationalizing in our OEM network as well as supply chain. So combination of these factors down the line should help us to restore back to decent margin.
By when do you expect that number to be there in your books, Mr. Shah? And how much would the international business contribute to that? Because after quarters of pain, this business has come back. Will that be sustainable as well?
So at a top line level, international business contributes close to about 35 to 40% at a console level. And as it can be witnessed in December quarter, and that is likely to continue in March quarter, overall business, international business pie YOY should register decent improvement, especially in climate technology, where we have begun the complete transformation. That transformation is underway, and we are already getting part of the benefit and fruits starting last quarter, which should continue in current quarter. And we expect that from September 24 quarter, the transition should be complete in all respect, and at that time it should be completely reflected. However, as far as our Inco Mexico is concerned, GSK China as well as Brazil business, they have and are doing decently well.
And the margins you said will reach 25% by when?
Pardon?
The margins, the target of 25%, when does that happen?
No, I'm not giving you any specific deadline or date for that. That is an estimation.
All right. No problem. Thank you so much for that. But, just one additional thought before we let you go. You have you have coolers, you are looking at room air conditioners. Have you thought of the fan industry by any chance? Because there's a lot of disruption which is happening there as well, with a lot of new players gaining some success in market share.
So, by the way, starting last year itself, we have certain models called as Duet as well as Surround. They are usable round the year, and they are much upgraded version of fan, and it is in a way our adjacent category. And they have received decent response, and they are premium products with a decent margin.
Okay, all right. Thank you, Mr. Shah, for joining us today. So that's the word coming in from Symphony. The demand is stable, and at the dealer levels, the inventory is also normalized.